Good morning, everybody. Hope everyone's doing wonderfully well. It is your game plan time with me, Master Trader Gareth Soloway. It is always a pleasure to do these with you guys. I love the excitement. I love the nature of people wanting to learn how to read charts, how to analyze things, how to understand the macro picture, because that is what I'm here for. So ultimately, guys, I'm here to give you guys the insights that I have so that you can trade the markets appropriately and make money. All right, so we got to talk about today's day because it is a wild morning session. The S&P futures are getting absolutely annihilated. We're talking down like 85 points on the S&P futures. That is a big drop. Looks like we bounced just a little bit ago, down 78 points. Dow futures are down 626 points. So we're seeing a major renewed sell-off. Yesterday, we had a little bit of a reprise. We had a little bit of a bounce that came on the back of a little bit of structure in the U.S. banking system. We saw no U.S. new failures of banks, and that was very important. But in the overnight, Credit Suisse starting to collapse. We saw Credit Suisse getting crushed here today, down about 20. Let me check right now. Credit Suisse down over 20% here, close to 30%, in fact, and that is creating some major panic. So yes, we'll look at some crypto today. We're going to look at some stocks. We're going to look at some commodities like gold and silver. I'm going to cover the gambit in terms of everything you need to know to make sure you're making money. All right, so let's start out with the banking sector. Number one, I got to say this. The first off thing is that this is ridiculous that this is coming as a surprise to regulators, to the Fed, to the government. Like, think about this, guys. You just saw the Fed in basically 1 year raise interest rates from essentially 0 to 5%. All right. How does anyone not think that's going to not break the system? Okay. Again, in addition, and this is something I've said for a long time, I've gone nuts on this. I've said that you essentially have a scenario where the market and investors got addicted like a drug addict to their drug dealer. The Fed was always saving the day. They were always coming in and basically, giving us more drugs in terms of quantitative easing and cheap money. So the fact is, when you go cold turkey, what the heck do you think is going to happen? And I said this a year ago. I said this a year and a half ago. I said the system would break. I said, be ready for black swan events. They're going to come. And here we are today with the banking sector a mess. Europe is now a mess. We're seeing, again, the banks in Europe getting absolutely annihilated today. And again, it's kind of common sense. To me, it's common sense. Now, in all fairness, is it the Fed's fault that we're in this predicament? Partially, yes. And the reason I say partially yes is because they said transitory, right? We remember that word, transitory. Inflation's going to be transitory. There's no need to really jump on and start raising rates yet because it's going to be transitory inflation. They were wrong. They had to play catch up, which means they had to jack rates up in a short amount of time, insane amounts. And remember, we're not just talking about going from 0.25% to 5%-ish. We're talking about the rate of change, how quickly it happened, and we're talking about how many hundreds of percentage points that was an increase from 0.25 to where we currently are. Now, in all fairness, banks like Silicon Valley, they deserve a lot of blame too. These guys are probably getting paid millions of dollars. In fact, I saw that the CEO of Silicon Valley Bank cashed out like multiple millions, like $3 million just before this collapse in stock options or whatever he was doing. And ultimately, these guys are getting paid this type of money. You better be damn sure you understand the risks when you see the Fed raising rates. So they're not innocent here either. Now, you know who's innocent? The retail investor that's gotten caught off guard in this stuff. Now, if you've been following my chart analysis, if you've been following everything I'm doing, generally you're prepared for this. We knew this was coming. We had lots of shorts in the moneystocks.com's portfolio going into this action. All right, we had crypto shorts just before this latest dip. Then we went long crypto in verified investing crypto just going into this latest bounce. So again, we've been prepared because we're swing traders. Swing traders, it's huge. The difference between a long-term investor and a swing trader is millions of dollars in net profits. It's just that simple. Now, that's when you do it correctly, obviously. All right, in essence, let's get into the charts, guys. We got to analyze some chart action here. We basically had, by the way, PPI data this morning came in better than expected, meaning it was lower. It actually dropped 0.1%. And what that means, folks, is that inflation on the producer price side is coming down. You would have thought that the markets would have rallied a little bit. Didn't really happen that much, but nonetheless, we are starting to rally a little bit off the lows right now. Now, this is Credit Suisse's chart. Look at this. This is your weekly chart. All right, now Credit Suisse is below this key trend line. If we go to the daily chart, look at this. So let me rephrase that. Let me get that back. So look at how Credit Suisse, and this is, by the way, not even including pre-market data. Pre-market data, we're down basically sub $2 down here. But we notice how we broke this long-term trend line to the downside. When you're in a bank stock and you see that type of break, that is not good. Not when you're seeing a break like this at these lows. Because you know what this says to me? It says that there is a risk here of them basically being taken over by the European government. All right, when you have a break like this. Now, if this trend line held, I'd be interested in buying it. But look at over the last couple days how it went below. That is not a good sign. I don't know if they'll get taken over. Maybe they'll get backstopped by the European Central Bank. But either way, it is not a good scenario here. All right, so Credit Suisse, be careful, guys, there. I don't know the outcome here. Just be aware. For instance, I made a small error myself. I got into some SBNY before they basically took that one over. Luckily, it was 1% of my portfolio. That's called risk management. Risk management, where even when you get into risky positions, you're going to only put a small amount in. So if something crazy happens, you just say, okay. And the beauty of it is we've already had multiple winners in the last couple of days, making up for that loss beautifully. All right, next up, let's take a look at the dollar. I want to take a look at the dollar today. We know that the PPI data just came out. The dollar is getting a pop today. Look at this. Now, why is the dollar getting a pop when inflation's coming down? I mean, riddle me this. The answer is very, very simple. The dollar is getting a pop. It's ignoring the PPI data. Instead, you know what it's doing? It's looking at the craziness in Europe. When people get panicked, when they get so fearful, do you know what they do? They buy US dollars and they also buy gold. All right, that's what people run to. So it has nothing to do in a normal scenario. If the banking mess in Europe wasn't going on, if the banking mess in the US wasn't going on, you know what they would do? They would be probably selling the dollar on the PPI data. But because of this, because of the issues here, people are running to the safety of the dollar, and that also is not a good thing for the US markets. Markets don't like a higher dollar. You know what else doesn't like a higher dollar? Bitcoin. Bitcoin, again, pulling off yesterday's high. But look at this chart. This is why I use charts in every day. I had a long and verified investing crypto in Bitcoin. You know where we unloaded it? We unloaded it right into this trend line here. Look at how this trend line has caused price to pull back every time. And so, again, the thought process here is, well, don't try to reinvent the wheel. Just follow the freaking charts. And that's all I did. So yesterday we unloaded just above 26,000 our Bitcoin position, and it's pulled back since then. Now, again, part of that was also a 3-bar surge. We know that in trading, when you have 3 mega green candles to the upside or 3 mega green candles to the downside, in general, you get a bounce or a pullback. In this case, when it's a sharp move up, you get a pullback to the downside. Another chart that's worked on, look at this. All right, now Pac West is down on the day today, but look at this. 1 bar, 2 bars, 3-bar surge to the downside. What happened yesterday? You got about a 30% bounce in it. So again, 3-bar surges don't basically tell you that it's 100% guaranteed, but I'll tell you this, when you get 3 bars in one direction in a market, that's a major move. And we're talking, I mean, this was a 50% drop in Pac West. You're going to generally, again, probabilities. I deal in a world of probabilities. Remember that. It's nothing guaranteed. There's no sure thing. You could easily have losses. God knows I have losses. But again, it's probabilities. I want to be the house, not the gambler. I want to be the casino, not the gambler. Okay. So again, that's just a little analysis on Pac West. Let's go back to Bitcoin here. Then we're going to get into gold. We'll get into some silver as well. So stay tuned. We'll also take a look at some other charts that you guys want to take a look at. All right, so right here, this was resistance on Bitcoin. Now, Bitcoin's hanging in there today in spite of a stronger dollar. Now, that's kind of weird. Why is Bitcoin up when the dollar is surging? The answer is so simple, and it's so poetic for why I like Bitcoin long term. Now, you guys know, shorter term, I still think we're going lower. You know, that hasn't changed. 12 to 13,000 first target, maybe 9,000 second target. But on the longer term basis, what we're seeing today, what we're seeing for the last week is exactly why Bitcoin was invented, why it came to fruition. It's because when you have this craziness in the system, when you have scenarios where the government has to come in and backstop deposits, when you have all this stuff because these banks are not doing and following the rules, or essentially they're not managing their own risk, you know what is okay? Bitcoin. And so you're seeing people, I mean, think about this. think about how investors are selling banks and actually buying Bitcoin. This should be the most freaking exciting thing to any of us that we're seeing out there, to see this occurring, because this shows you that there is an alternative. That for some of us, yeah, I have most of my money in banks, for absolutely. But again, am I looking at Bitcoin as a long-term potential to offset risk in the banks, to offset risks of printing of money? Absolutely. And that is why what you're seeing in this latest crisis is why Bitcoin will survive, in my opinion, and will thrive down the line. Now, granted, it's got to go through growing pains. We know that. Growing pains, yes, every asset does in the beginning. It's only really 14 years old. Bitcoin is a baby, basically a teenager at this point. So you have to let it go through growing pains. Okay, so what's going to happen here? For me on Bitcoin, I think you're going to pull back to this line right here. You might get a little bit of a bounce. Then I ultimately think you'll retest down here and eventually break lower. I still think, again, this 18,000 and change level will be meteoric support. I plan to buy some Bitcoin off that level. There's another level here to look at. Take a look at this. If we put a trend line in right here and we put it from this low and just curl it up, look at where that line coordinates, right at the 18,000-ish level, 18.2. So to me, when you have a confluence, when you have two or more trend lines converging, and if price comes in there, that is a huge level of support. All right, next up, let's take a look at, we'll look at Ethereum real quick, right? Ethereum, I put this alert out yesterday. In fact, we shorted it yesterday in Verified Investing Crypto. Resistance, resistance. Guess what happened yesterday? Resistance. We're in the money on our short in verifiedinvestingcrypto.com. So again, not a lot in the money, but nonetheless, just following the charts. While everyone else was talking major breakout new bull market yesterday, we just simply sold our Bitcoin into resistance and we shorted Ethereum. Very simple. You know, again, we're not trying to invent the wheel. I don't try to invent the wheel. I let the charts talk to me. Essentially, looking at this chart, when I first started, 20 plus years ago, it was a foreign language to me. I was like, what the heck, man? It just looks like a bunch of weird ups and downs and reds and greens. Heck, it looks like a Christmas tree. But you know what? When you learn the language of the chart, it speaks to you. It doesn't tell you what 100% is going to happen. It tells you what the probability, a high probability scenario is. All right, let's go to gold. I know you guys are waiting on gold. Gold is ripping higher today. Beautiful move to the upside. And look at this move here. Guess where we're headed, guys? All right, look at this chart. You have your up move for 2 years from 2018 to 2020. You have sideways consolidation. I still remember when we were trading down here, everyone was like, oh, Gareth's insane. Gold stinks, da-da-da-da-da. Yet it was still the best performing asset between the S&P 500 as well as Bitcoin. And then look at the run it's gone on here. This was my prediction, is that when the Fed finally gets to a point where they have to pause because things get so messy in the economy, you know what's going to happen? We're going to see gold rip. Now, gold is going to have resistance coming up at this upper trend line around $1,955. That is okay. That's normal. It's going to have a pause, a pullback, and then it's going to bust through and break out. And then you know where it's going to go? It's going to go to your double top high right here. All right. By the way, I have to just point this out. This morning, BlackRock's Larry Fink, who is, by the way, one of the most respected investors and traders in the world, said exactly what I've been saying for the last year, that inflation, and this is one of the cases for gold, is going to stay elevated for many years to come. He said 3.5%. I've been saying around 3%. I think that's exactly dead on. I'm sticking to that. And you know what? The fact that the Fed is going to have to probably pause or stop hiking, maybe they'll hike 25 basis points next week to keep face. Again, the Fed seems, intent, just like when they said transitory and it wasn't, they had to just overreact the other way. But the bottom line is that essentially you're going to have inflation staying elevated, which is then going to be the bull case of long-term for Bitcoin as well as gold. And you know what's crazy? So you're going to have gold resistance at double top, triple top, essentially at 2070. But I want to show you this chart, guys. This is the chart that blew my mind. So essentially, remember this, 2018 to 2020 up, and then sideways to lower for the last 2 to 3 years. We're going to go to the weekly chart. I know some of you guys have seen this before. But if we go back to the 1970s, the last time we had these issues, the last time the U.S. faced inflation that was as high as what it got to, you had the same pattern of performance. Basically 2 to 3 years up, 2 to 3 years sideways down, and then look at the bull run that gold went on from essentially a low of $110 to a high of almost $900. So again, look at the patterns basically redo themselves. They're mimicking, they're rhyming. And this is the way charts work. Now you might say, well, what the heck? I mean, why do charts continue to repeat? I mean, how is that even a thing? And the answer is simple. Do you know who was trading this back then? People like you and me. People like the millions of people that trade commodities that were influenced by the scary nature of inflation, what was going on with the Fed, all of it. You know who's trading it in the current time frame? If we go back here, you and me, same thing. And that's why it repeats, because the same fear that we feel, the same emotion, the same greed, it's repeating in any time frame. You could go back 1,000 years. You could go back to ancient Rome. You could go back to ancient Egypt, and the same emotions were present. And that's who the buyers and sellers are feeling, that emotion. And that is why trading essentially repeats over and over again. By the way, that's why charts work, because it's essentially repeating. Okay, let's go to NVIDIA, guys. NVIDIA. So what do we have on NVIDIA? And I'll go to silver real quick in a second. I know some of you guys want to look at silver. So basically, NVIDIA had this beautiful breakout here. I'm still thinking that NVIDIA still potentially has some upside. I would absolutely not buy it, though. It's way too extended. Yes, it's down this morning, no doubt about it. It's trading down on the morning. But essentially what we have here, look at this. This is my area here. If we get up to here, this is where I think the top is. And I think also we're seeing banks being sold off and money's rotating into tech. Tech has been very strong the last couple of days. We can see, again, look here and look here on NVIDIA's daily chart. So essentially what I'm saying to you is that if I had to put money on it, I would say, yeah, you have a little bit more upside, maybe another $20 upside in NVIDIA. And then likely we're going to see a pullback and a drop. And by the way, the drop's going to be big. I think we go back and retest this inverse head and shoulders. By the way, do you guys see the inverse head and shoulder pattern here? Look at this. All right. For those of you that know your technicals, inverse head and shoulders, it was basically telling you that when it broke, it was going to have a big run. And by the way, you can do the measured move from here to here, and you'll see that the measured move from breakout is basically up to here as well. So that tells you that's how you calculate a target. For those of you that have watched my verified investing education webinars, my courses at verifiedinvestingeducation.com, I go over exactly how to calculate the exact target on an inverse head and shoulders or a head and shoulders breakout. All right, so that's where we have there. Let's go to silver real quick, guys. And again, I'm going to do another few minutes of this, and then I got to get on my live day trading room because, again, there's a lot of action today, and I'm just kind of scanning through, looking over to see my positions on my computers over here as I'm in this cockpit in this new awesome office that has a trading floor. Take a look at silver. Silver is running in Verified Investing Alerts, which is my stock service at In the Money Stocks. We are long SLV. And SLV continues to run up here. Where's SLV going to run into resistance? Right here. This is going to be your resistance line. I think it does get up here before it pulls back. Your target is around $23 on silver. So great move from basically sub $20, now above 22.25. I think you have a little bit more upside. Eventually, is it going to break out of this wedge pattern? Yes. Eventually, yes. But you'll have some pullbacks coming up here on this chart. Let's look at the 10-year. 10-year is really important to look at, right? We know the Fed is all about, maybe. Remember, and by the way, how long ago? I mean, think about this, right? How long ago was it that Jerome Powell testified in front of Congress? I think it was like last week or the week before. I think it was last week, in fact. And he's like, we might have to do a 50 basis point rate hike. Like, dude. Now, basically, that was just before the banks collapsed. And it really is kind of crazy, but bottom line is I guarantee you there's no 50 basis point hike coming, probably not a 25 as well with what's going on now in Europe. And look at this. Look at how we went up here. We pierced briefly, got above this recent high, and now we're coming crashing down. The yields are falling. What that tells you is that the expectation for Fed hikes, you're actually now, the market's now pricing in cuts by year end. Think about that. The Fed may cut. If things get bad enough in the financials, they may have to cut before the year ends. Where is support going to be? Right here. If you know the methodology, 1, 2, 3, 4, we know that this level is now a weaker level. Where are we going to go on yields? I'm going to give you the level right here. Zoom out. We're going to go down. Get this, guys. I predict that within 3 months, the yields are going to pierce 3%. Look, we're going to break here. This is your next support. On the 10-year, 2.92, 2.95, we'll call it. That's your next major support level. By the way, you can also see here, we can also put in a trend line. There's a little bit of support here and right in here, but all of this area, this is where we're going to go down to. Yes, let's look at natural gas real quick. I know you guys are all about the nat gas. I have traded that quite a bit as well. Nat gas is pulling back today. Again, There was support down here. We could see this little area right down here. I know it's hard to see because it's kind of a beaten down chart. Because of the turmoil in the economy, the idea is economically, the global markets are going to slow down. And I got to look at oil here because oil is a trade on oil, guys. I'm going to talk to you about this in a minute. But yes, I think there could be a little bit more downside in nat gas. But as long as you have this pivot low intact at $2, that's your low pivot. So you trade against that. If it gets broken and confirmed below, then obviously you step aside. But right now, 2 is your key level. Okay. All right, next up, let's take a look. Oil. We have to look at oil because we do have a trade. In fact, guys, I predicted that we would go to $65 on oil. Look at how close we're getting. We're at $68.67. Basically, I'm going to start buying at 65 bucks, which is going to be right here. There's going to be additional ads by me around 63 and change. You're now getting into, look at this area here. Look at all this support right down here on this oil chart. So this is where oil bounces, guys, anywhere between 65 and 63. I am a hardcore buyer on this at these levels. So again, watch that really closely. Again, if we get down there today, I don't know if we'll flush there today. Maybe it'll be tomorrow. But that is your level to watch. That is your level absolutely on oil. That's where, at least for me, and I can only speak for myself, what I'm doing with my money. But I will be looking to buy into oil around that level as a swing trade. Not a long-term investment. Guys, I don't believe in long-term investments in this market. There's too many potential black swans out there because of the Fed craziness. And again, blows my mind that they do this stuff. But bottom line is, that is, again, the level to play oil. All right. Again, what I'm looking at here, guys, I'm going to do one more chart. Let me just scan through. We talked about oil. We talked about that. Yes, Alibaba. So again, Alibaba is down in sympathy, but I do have some key levels to watch here. You can see I have some former levels up here that is broken below. You had a bear flag break down there and then another one right there. But let's look at this, guys. Let's take a quick look here. I want to show you on the Alibaba chart. And by the way, I think China is honestly one of the places to hide. Here you have $76 right here. That's going to be big support, and then more support down here. If it gets down in this range, there's tons of support. In addition, if we do a Fibonacci retrace, let's look at the fibs. I always like to do my Fibonaccis. Let's look at that. So currently, interestingly enough, we're currently at a 618. Ooh, that's interesting. So even at current price, you're at a 618 Fibonacci retrace. If you get down to this lower level here, you're basically closing in on a 786 Fibonacci retrace. So that, again, this is actually some support here, although we'll have to see how it reacts with the market today to see what it does. But again, last I checked anyways, it was down a little bit. But if we get through here, this is your next level right here. All right, guys, I have to get to my live day trading room. I'm sure they're waiting with bated breath for all the day trades that we're going to rock today. Yesterday was a 4-for-4 day, 4 winners out of 4 trades. And again, come check me out at inthemoneystocks.com for stocks and commodity trades. If you're into crypto, verifiedinvestingcrypto.com. And if you're into education, which everyone should be in because it will change your life when you get educated, verifiedinvestingeducation.com. Follow this stream. Follow me on YouTube. Share it with your friends. I love you all. Thank you for coming out. I'm going to continue to do these. Eventually, these will be daily. But right now, probably once a week until I start that. Have a great one, and thank you all for coming out. Take care.